the Managing Director of Hindalco Industries, Mr. Satish Pai, who is now joining us. Mr. Pai, thank you so much for taking your time out, and let's start by talking about India operations, where if we compare the numbers on a sequential basis, it looked soft, but as compared to estimates and even when we compare on a year-on-year basis, it was a strong growth of 26% YOY. If you can take us through what transpired for India operations in the first quarter of FY27?
So for us, this quarter on the India business has been an all-time record EBITDA and PAT. And I think that the basis of this is that the aluminium prices have been very strong. Our operations have been very steady and consistent. And I think that our costs, we have been able to manage the cost as well, because many of the energy costs and all have been spiking. But I think that we managed to keep the costs at about 4% increase in rupee terms. So on a dollar terms, it was flat. So the fall through was very good. So I think that, good commodity prices, strong operations, and good cost control.
Okay, higher commodity prices and cost control aided numbers in the quarter gone by. But much of the revenue growth, as you rightly pointed out, was aided by higher aluminium prices on the London Metal Exchange. And that was a major factor of West Asia crisis as well. Where do you think aluminium prices are headed in the near term? And do you expect them to remain firm?
So I think that we see aluminium prices for the remainder of the year staying very firm. I think that currently they are at 3,200. I think the range will be somewhere between 3,200 and 3,400 for the rest of the year. Largely because this calendar year, aluminium will be in a $1 million deficit. Inventories are low because the Middle East capacities have still not come back into the market.
Okay, so 3,200 to 3,400, that's the range where you expect aluminium prices to be for the rest of this year. But let's also talk about downstream EBITDA per ton, which came in at about $303, which was an increase of 15% on a YOY basis. Is this number sustainable, or were there any one-offs which are likely reversible in the next few quarters?
No, there was no one-offs. I think that because of the aluminium prices, we could maintain a high pricing on the downstream level as well. I think that, downstream volumes are going to pick up further in Q2, Q3, Q4. So I think that the overall profitability and the volumes on the downstream side, you're going to see an increase in the coming quarters.
Okay, so downstream profitability and EBITDA is likely to increase, and there were no one-offs. That's the word coming in. Mr. Pai, let's also talk about costs for both India as well as Novelis operations. Where do you see them headed going forward?
I think on the India business, we are going to see some more costs going up in Q2. It's a monsoon quarter. Generally, the coal costs go up. So I think you're going to see another 3 to 4% inflation in costs in Q2 over Q1. On the Novelis side, I think, we have a very active cost reduction program going on. We have already reached a run rate of $225 million on an annualized run rate. So I think on the international side, we are extremely conscious to keep the costs down, and we are actually having good results in that.
And while we are talking about Novelis, let's also talk about Bay Minette, which is now nearing completion. And we have spoken about this time and again with respect to the timing of its IPO, which has been on hold for the last 1 year. When will Novelis IPO, which has now been stalled for more than a year now, see the light of the day? Is it likely in the coming few months?
Our only focus in Novelis right now is to get Bay Minette commissioned and then ramped up. And the ramp up will take another 18 to 24 months. So in the short term, plans for Novelis is complete Bay Minette, ramp it up, and then deliver the balance sheet to get the net debt of the EBITDA of Novelis back to 2.5.
So IPO perhaps some months away, that's the word coming in. But let's also talk about EBITDA per ton for Novelis, which came in at about $563 per ton, which was an increase of about 4% on a sequential basis. And medium-term normalized EBITDA guidance of 600 has been maintained. What will EBITDA per ton be for the remaining 3 quarters of FY27?
So I think, it's important to point out that if you take out some of the insurance recoveries, the underlying Novelis EBITDA per ton was $525 per ton. So I think we are fairly confident for the remaining 3 quarters we'll be able to maintain it at those levels.
And what about consolidated net debt, Mr. Pai? It came in at about 77,500 crores, and net debt to EBITDA at a consolidated level has risen. And for Novelis too, it came in at about 4.5 times, which is at the upper end of your earlier guidance of about 4.1 to 4.5 times. Has debt now completely peaked out with Minette coming to an end? And what will the deleveraging roadmap look like for the next 2 months?
So the consolidated net debt to EBITDA is 1.95. Novelis net debt to EBITDA was at 4.47. We think this is the peak. It's going to be probably at the same levels in Q2. And we have committed that in Q4, Novelis's net debt to EBITDA will come below 4.
Okay, Novelis net debt to EBITDA below 4 by the end of next quarter. And let's also talk about tariff related costs. Are that a concern for Novelis at this point in time?
So I think that, this quarter we had about 70 million tariff impact because we still had to import a lot of metal as Oswego is not fully ramped up. So quarter two, Oswego will fully ramp up, and then most of our US supplies will come from US based plants, and hence the tariff impact should get minimized.
Okay, Mr. Pai, thank you so much for taking your time out and joining us here on ET Now. And congratulations once again on a very strong set of numbers that you reported. The stock